Now, remember the flash crash of European stocks last month? Turns out it might have been caused by a London Citibank staffer's so-called fat finger here. Now, the blunder did sell off, I think, about a 5-minute-long sell-off on the OMX, and it eventually actually spread all the way from Paris to Warsaw. And at one stage, it actually wiped something like $300 billion out before we did see a bit of a recovery. Well, the bank's been talking about this and talking about the losses they've incurred.
Yeah, I mean, it's a moving target. We understand it's about 50 million US dollars, and based on our sources, we understand also that that number could actually also move higher. Of course, the bank is still in talks with regulators and the exchange on what really happened. They're looking at their algorithms to understand why, at least from an ops risk perspective, it actually went through. As far as what that might mean for Citi, I mean, is it the end of Citi? No. Financial situation. Top is retained earnings, net loss, and income, and that's obviously the relationship between that. So I guess just putting this into context, maybe some bonuses might be at risk. We'll see, but they'll be okay.
Yeah, I don't want to get make light of this, but I remember in September of, I think it was September 2006, that we had, I think it was Bank of America, we had one trader getting ready, had his order ready to go, but they were throwing a rugby ball around the office, and they threw it to him, he missed, it landed on his keyboard. And what happened then? Well, a $50 million trade went through without it actually being sanctioned. There you go. Right.